What's up everyone, it's Scotty with MoneyVest. So in this video, we are going to be talking about PayPal, and PayPal seems to be a stock which is not moving, is not doing well. A lot of people feel that PayPal is a dead company. It's a dead stock. It's just no value anymore. And in this video, I wanted to break this down, go over everything related to PayPal more recently, kind of give you guys an update and also do a little bit of an intrinsic value calculation to show you how sort of cheap PayPal is trading at the moment relative to its own valuations from years ago. So hope you all enjoyed this video and find it helpful. Make sure that you drop a like and don't forget to subscribe to the channel if you're just joining us for the first time. And again, I do want to remind everyone that July 8th is when we are going to be doing the beta launch for the MoneyVest platform. All the existing members will have access to the entire beta launch, and you can access as well with a 51% discount right now. 3 more spots left if you want to take advantage of that. We're going to lock in this pricing forever. So for every additional upgrade or new feature or new tool that we announce, it's going to be at no cost to you. So again, you'll be able to access this entire website where you can analyze individual stocks, look at their MoneyVest metrics that we have created, including all the fundamental analysis. Also plot a lot of the data points on a chart and really have a very good visual sort of understanding of their fundamentals as well. And then also the calculators, including, discounted cash flow and discounted earnings multiple model to calculate the intrinsic value for these companies, including price targets as well. So link's going to be down below. We'd love to have you on board. If you have any questions, just let me know. So first things first, I wanted to break down is that the CEO, right? So Alex Chriss, now there's been, of course, some transition. PayPal is moving a little bit more on a different scale in terms of the vision or the objectives that Alex Chriss has now installed within the company. Ever since the retirement of Dan Schulman, Alex Chriss coming in with very, very specific targets of profitable growth. And you'll notice that he's also taking an approach where he is very public, and at the same time, he is confident in building PayPal to what it could be. And this is just a very simple example of how motivated or how what kind of a leader Alex Chriss really is. So this is, again, just him doing customer service on Twitter. So one of the users basically mentioned that I'm seriously reconsidering that decision after realizing that OG of electronic payments, which helped facilitate the rise of e-commerce, still requires their customers to print and mail or fax form to dispute a charge. So this is just another user. Chris basically tweeted this, and then to which Alex Chriss responded back, "You're absolutely right. Unacceptable. We're fixing across the platform as well." So again, just goes to show that he is taking customer service very, very seriously, taking feedback very seriously, and is going to build a platform and is basically going to reignite that growth and build PayPal into something that is loved and used by hundreds of millions of merchants and people as well. And simple stories I can give you is that even with my own business, as I've mentioned before, I used to use Payoneer. I switched into my entire business over to PayPal because Payoneer was even more stressful for me personally. And ever since I've been using PayPal, it's been over 6-12 months. I've never been more happy. And I'm now in the process of opening a business banking account with PayPal as well, because it's global, because it's accepted in so many different countries, because it's more safe, more secure, and fast and reliable. It makes absolute sense for me to be utilizing PayPal. And I know that a lot of people are thinking that Apple Pay with the announcement is going to absolutely crush PayPal's moat, but I've got some analysis of that as well, because I was going through the differences between Apple Pay and PayPal. And one of the biggest difference really is that Apple Pay is, again, limited to Apple devices only, and PayPal is once again more broad and widely utilized when it comes to multiple different platforms across many different countries and many different merchants. So those are some things to really consider when you are looking at a payment provider which is accessible and applicable globally versus something that's more limited to specific hardware. Now PayPal keeps cutting jobs, keeps doing buybacks, and beats earnings estimates, and the free cash flow is close to an all-time high, but the stock is 73% down. This was from Bourbon FPS. Solid company, investors left to buy overpriced companies, but they will come back. PayPal is a buy and hold. His fair price, again, this is Twitter user, at $110. Employees going down from 30,900 down to 27,200, and that is eventually once again going to help the bottom line for the company, because one of the biggest expenses for any business is employees. It's salaries and wages. Now here is a very quick overview of the pros and cons that I wanted to go over for Apple Pay, and then we'll talk a little bit about PayPal as well. For Pro is, of course, super secure transactions, fast and easy to make contactless payments using your phone phone and accepted by millions of merchants in store, online, and in the app, and no transaction fees. Cons is, again, one of the biggest cons, only works with Apple devices and isn't compatible with some older models before iPhone 6. Not all retailers accept Apple Pay. Can't be used if your phone has run out of battery, and feature to send payments is not available in the UK. So this was more of a UK comparison for Apple Pay versus PayPal, but I think we can extrapolate some of the key takeaways from this analysis over to other parts of the world as well. Now, PayPal, let's just go over the cons first. Complicated fee structure, high fees for international payments. And I think that is obviously true because, international transfers to this day still requires fees, right? You still have to pay something in exchange rate fees or transaction fees to send and receive money globally, internationally. You must have a PayPal account, of course, to transact with PayPal, and not as easy and convenient for in-store payments as contactless mobile wallets. I think this is something that they are also working on, is to allow people to use their PayPal wallet mobily, when they are on the move, right? So that's something that is also what PayPal is exploring and is going to be looking into. But some of the biggest pros are widely accepted, right? Especially when shopping online, very secure, fast or instant payments, no device restrictions, use PayPal on any phone, tablet, or laptop, can be used to send and receive online payments, easy to use accounts with multiple features, pay in store with PayPal app or QR codes, and free to open an account and free for many transactions. So it's just that it's not applicable with mobile wallets. For me, it's not even that con. So the biggest con really that I could see here is the transaction fees, and the fee structure obviously being a little bit higher than that of Apple Pay. But with that fees, of course, comes the perks, which is widely accepted, no device restrictions, more secure, more fast, and more reliable. And again, globally in over 190 countries. So this right here, market share, when it comes to mobile wallets only, Apple Pay 69%, PayPal 31%, iOS users only, and this is for all users over the age of 18, fees none for domestic transactions, including paying in store, 5% fee for international transactions only, right? So international, of course, and I'm really surprised, Apple is able to do that without any transactions, because the partner banks that they are working with, I think Goldman Sachs is one of them, definitely do charge international transaction fees if they are making international transactions. But eventually, I do feel like they are going to introduce some type of fees in the future, because no model allows for free transactions, right? Unless you're doing it on the blockchain, or unless you're doing it through crypto, no transaction USD wires or transactions internationally are going to be done for free. Unless, of course, we're moving into that direction where all partner banks and all banks across the board agree that, okay, we're not going to charge anybody anything for any transactions across the board, internationally or otherwise, but we're not there yet. I think PayPal is, of course, charging these fees because, of course, their partner banks also charge the fees, but Apple, I'm surprised that they're able to do that, but eventually it's possible that they do introduce some fees as well, because this is not going to be a profitable business for Apple at all if they're able to do that. And of course, limits none, although some retailers may have a 100-pound contactless limit. Of course, PayPal doesn't have any limits altogether. When it comes to security, payments completed with Face ID or Touch ID, and PayPal uses data encryption and buyer protection policies, and their buyer protection is actually very, very strong. I've experienced this myself multiple times. And when it comes to buyer protection, buyer and fraud protection policies, payment protection provided by the card issuer only. I think that's one of the biggest drawback of using, Apple Pay over PayPal, is because if I'm buying something through PayPal, I'm protected against the buyer and fraud protection. Whereas with Apple Pay, it's solely up to the buyer to make sure that everything is good. And if there's any fraud on the other side, or the seller doesn't fulfill the order, I have to go to my card issuer to kind of start a claim or start something, a dispute, to file for a refund. There's no Buyer Protection Act. I think that's also something that I think a lot of people are going to miss if they actually switch from PayPal over to Apple Pay. And then, of course, we come over to support online shopping in person as well for PayPal. And these are some of the reviews. 24,000 reviews, 4.7 star. Apple Pay, 4.7 star for 767 users here. And again, most of the things, 4.4, 4.5, 4.5. And ease of use, Apple Pay was a little bit higher, I'm assuming because of the mobile wallet functionality, which PayPal doesn't currently offer. Of course, you have to download the PayPal app and, scan through the QR code and whatnot. But Apple Pay, of course, being just generated through your wallet, gives you that ease of use when you're in the actual store. paying for stuff. But overall, I think it was a very, very similar rating between these two things. And again, these are some of the pros and cons. For Apple, it was not accepted at all places yet, sometimes glitchy and does not work at some of the merchants. For instance, it doesn't work with the bank that I have now versus the bank that I used to have before. It was frustrating. And cons for this PayPal is, again, dispute process for disputing charges. And the two things I hate about PayPal is its account limiting for favoring buyers' disputes over sellers. I think that can actually be labeled as a pro because, PayPal has obviously a lot more buyers than it has sellers or merchants on the platform. So that's why there is policies slightly in favor of the buyer than it is on the seller, because at the end of the day, it is a mediator, right, and wants to protect the interest of both buyers and sellers. But because buyers are really what powers the platform for sellers to be there, it's slightly in more favor of the buyer. So it really, there's not questions asked if there is anything that happens. Again, Buyer Protection Act is very, very important. This right here was from a Reddit user that I wanted to highlight, which I think was a very interesting analysis. Which, this person basically mentioned that this is a non-factor. This is just a cosmetic update to something that already exists and isn't even going to be widely available for all users in reference to Apple Pay. And they also mentioned that Apple Pay, which is a bigger threat, actually uses Braintree that PayPal backed or backend for a sizable portion of its payments. Additionally, in Europe, legislation has opened up to tap to pay outside of just Apple Pay. And even if PayPal doesn't grow revenue anymore, they had a 9% growth last quarter, and they're still valued at around 12 times enterprise value to free cash flow. And that free cash flow estimate is likely to be conservative, 10%-ish, and are buying back net of stock-based compensation of 5 to 6% of the company. That's true. Like, they're buying back a lot of shares right now. They've just been consistently plowing money back into the business, and the share buybacks has been very, very, very strong. Apple Pay has been a thing for years, and the businesses has still grown. It just hasn't grown as much as it got larger. Still, with the new initiatives, Braintree pricing, and Venmo monetization, there's a lot of near-term, intermediate-term catalysts. Additionally, on the Apple innovation front, they just partnered with a firm on loans, mainly because their own innovation hadn't really worked. PayPal under new management has innovated, or at least appears to be, although we need to see more results and from those efforts before giving it credit. Once it does, of course, it will fly. So this right here is the, of course, consistent increase in revenue while the price continues to go down. And everything that I've mentioned so far into the video, and I know there's going to be people saying still that PayPal is a dead stock, PayPal is not worth investing in. Just hear me out. Eventually, a lot of things will translate over to revenues. Everything translates over to the numbers, right? Whatever stories we tell ourselves for whatever stock, whatever company that is that we're investing in or analyzing, eventually, sooner or later, everything is going to make its way over to the top and the bottom line, period. Whether it's Tesla, whether it's Nvidia, whether it's PayPal, whether it's, Salesforce, whether it's Apple, whatever company it is that you're looking at, whatever stories you're telling yourself, other people, you're discussing that this company has this much potential, it's going to do this, this company is going to do that, whatever it is, eventually, sooner or later, it's all going to be materialized and be reflected in the revenue. If PayPal is a debt company, revenues will start going down. Free cash flows will start going down. Earnings will turn into losses, right? Everything will start turning the other side, right? So we will see that. If Nvidia is going to be the best company of all time, it's going to keep growing. Revenues are going to keep flying. Profits are going to keep flying. Everything is going to be translated into numbers eventually. Numbers don't lie. Numbers never lie. So the idea is that, yes, PayPal right now seems to be a stock that, of course, is struggling a lot. It's, of course, sold off ever since Apple's WWDC event, getting rejected at that resistance of $68 to $70 a share, coming back down inside this green rectangle. Next support is going to be down to $57, down to as much as $50 a share. This is exactly where we were back in November of 2023. So those right there are going to be a couple levels to watch. But if you come over to a discounted cash flow model on a 5-year basis, even if PayPal only grows, I did a reverse DCF and try to match these two numbers, the current price and the intrinsic value. Even if PayPal simply grows free cash flows by 5% over the next 5 years, 5% growth in free cash flows over the next 5 years, which is a very, very slow and modest growth. We're looking at a fair value, which is exactly the same as the market price. If PayPal does not have, let's say 5%, let's say 2% growth, now we're looking at $52. If PayPal has no growth whatsoever, we're looking at $48. And $40 was exactly almost as much as the price back in November and October of 23. So if it does drop down to that level, $50, then the market's basically saying that PayPal It's not going to have any growth in free cash flows. It's going to constantly do $5 billion for the next 5 years. And even then, it's going to be traded at a fair valuation at $48 to $50 a share. So valuation is quite low. Free cash flow yield of well over 10%, I think. Earnings yield also of a little bit over, I think, 7 to 8%. So it's a cheap stock with a good balance sheet, with consistently growing revenues and free cash flows and profit. And management is testing out a lot of new things, a lot of innovative things. So, it's a company that has potential. It is undervalued. So we're going to have to wait and see and find out how much of a threat a lot of these other services really are. And until those numbers materialize, until those numbers actually start telling us a better story, I think PayPal continues to be, fundamentally speaking, very attractive at these levels. So let me know your thoughts down in the comment section below. I think it's going to take some time. I think it's going to require patience because management is buying shares. The management picked up a lot of shares in the last quarter. They're constantly updating us that they are buying more shares at these prices, and they should, because they've got plenty of free cash flow and their stock price is literally in the toilet. So they are going to continue to buy more shares at these discounted levels, and then eventually we'll find out, how strong the company performs over the long term. So hope you all enjoyed this video and a complete update on PayPal. Let me know your thoughts down in the comment section below. Also, do check out our platform. Again, 51% discount. You can lock in this pricing forever, and you'll be able to access everything on the platform and all the future updates and tools and functionality as well. So the link's going to be down below. As always, happy investing. I'll see you all in the next video.